for joining me over here. We are at the Unicorn Investment Fiesta 2021. For friends who are still coming in, let's give them some time to slowly flow in. For friends who are here, I have an iPad with me so I can actually say hi to you. I am Tammy Chu, your host for today. And meanwhile, I can see on the chat people are already starting to talk. Hey, good afternoon everybody. Yes, good afternoon. How's your 2021 so far? I see over here, oh, June is having a coffee for herself. I don't have coffee, but I have water with me. So cheers everybody. If you have a cup with you, I'm gonna cheers with you. Let me take a sip. Okay, meanwhile, continue to say hi. And remember, when you say hi to us in the chat, what do? You click on to all panelists and attendees. That is how actually I am going to see your comments. Because if you only write to attendees, what happens is only the attendees can see. If you type to only panelists, only us can see, but the attendees cannot see. So yes, 2021 is gonna be great. Cheers with me, yes, thank you very much. Cheers also. And today we're gonna have the Unicorn Investment Fiesta 2021. So before I start, some of the house rules, let me just share with you. So if you're on Zoom on laptop, on the bottom bar is the chat function, where I highly encourage you to come and chat with us. And remember to click on all panelists and attendees, and that is where all of us can see your comments. And for the Investment Fiesta 2021, we are doing this because we want to continue to improve and increase communication with you, our clients. And also we think it's really important, especially during these volatile times. With the trust that you have placed with us, we want to continue to help you grow your wealth and also increase and continue this partnership with more communication to share with you market updates and our view as well. And that in this journey of wealth accumulation, we can be better and we can enjoy prosperity together. So once again, I am Tammy Chu, your host for today, and welcome to the Unicorn Investment Fiesta 2021. Before I introduce the speaker for today, let me tell you a little bit about the flow for the event. We're going to start off with a chit chat with our speaker, and we're going to talk about investment outlook for 2021. And then we're going to play some games because we have some prizes we want to share with you. So listen carefully about what our speaker has to talk about or the questions I'm going to ask him later, because hint, hint, that is how you get some of the answers for the prize for the games later to win some amazing prizes from us. And meanwhile, if you have any question, feel free to type over here. Our admin, I'll try our best to answer you. Alternatively, at the end of the webinar, you'll be directed to a feedback form, and at the end of it, you can ask your questions there. We're going to arrange a session with our consultants to answer you separately if we think that's what you want. And without further ado, let me just flow in front. And then we're going to introduce our speaker for today. So our speaker today is the head of investment research, and he's managing a total of 420 million of assets under advice for Unicorn's client, including my money as well. He's the mentor of team for investment specialists and analysts, and he's a trainer and public speaker. So without further ado, let's put our hands together to welcome Mr. Xiao Gateway. Welcome, Gary. Thank you so much for being so patient.
Thanks,
sitting
Tammy.
over here, waiting for me to complete my first segment. Before we start to the more intensive, the more informative part, let me have a little chit chat with everybody in this group over here. Yes, we have people coming in to say hi to us. Remember to click on all panelists and attendees. I have Yo Chun saying, Mr. Grey Rhino. A lot of people say hi, hello Gateway. Hello everyone.
Hello everyone.
Yes, thank you so much for joining us. And Gateway, let me ask you some questions before we actually go to the main segment. Right? What will we be expecting from your sharing today?
Okay, I think that's a very pertinent question. Let me just share maybe via the slides that I prepared, to share with you all. What am I going to share with you all in this afternoon? Okay, so with a very nicely designed, personalized Unicorn Investment Fiesta picture done by our friend Peng Yu. Okay, so today what am I going to share is, firstly, I'd like to recap our 2020 VIPS results. Okay, VIPS is our portfolio of unit trust and ETF. Okay, and then secondly, more importantly, I'd like to share the reasons of the results. Why was that thing achieved? And thirdly, I think the most important contents for today, I call it assets allocation. Then after that, I will share about the developments and progress we have in 2020 to now. And then of course, looking forward in 2021, what are we going to expect? How are we positioned? Yeah, so I think that's what I want to be sharing. Okay, Tammy, let me just go ahead with it.
Yes.
Shall I? Okay, so firstly, I'd like to share the 2020 VIPS results. Okay, I think 2020 we've had a great year, and really thanks to all your trust and confidence, we managed to deliver it together. Yeah, because it wouldn't have been meaningful without you. So, well, I'm talking about net return. So it's already net of all fees. 2020 returns for the full year. So for our cash portfolio, we delivered a net of fees about 18.9%. That's using a client's portfolio, okay? And then for CPF portfolio, we delivered about 11.4%. And for SRS portfolio, we delivered about 17.7%. Okay, so I think one of my friend recently just shared with me today. He said the average hedge fund performance for 2020 was about 12.3%. So I think we are happy to share with you that we have I think we have done better than the average, which is I said as a steward, it's something very fulfilling to be sharing with you. Okay, and also looking longer term. Okay, but I like to just have a disclaimer. Let not this be an expectation for every year. Otherwise, my shoulder will start to droop because it will get so heavy. Okay, looking a bit longer term, since the start of Unicorn. Okay, we are talking about annualized return. Again, net of fees. We start from 2012, tracking until end of last year. And we track for clients who invested for more than a year. So less than a year, we exclude it out from the population because the period is too short. Okay, and this is taken from actual clients' population. That means all our clients' weighted returns. So on the over longer term, our cash portfolio delivered about 6.6%. Yeah, CPF about 5.2%, SRS portfolio about 6.6%. As you know, we don't attempt to beat the market. What we attempt to do for you as your planners is really to be able to help your assets, your assets to be growing above inflation rates with a couple of percents to spare. So you put it roughly at about 5% per year. And I'm happy again to be sharing with you that we managed to fulfill the expectation we set for ourselves, for you. Yeah, so I think it's worth celebrating for us to be coming back at the end of a great year. Okay, but I think most importantly, I'd like to share is not really the numbers. Yeah, it's what causes those numbers. I think it'll be interesting for us to investigate. Mm-hmm. Okay, I showed just over last year. Okay, 3 separate graphs. The one on top, the blue chart, represents our VIPS cash portfolio. Okay, VIPS, by the way, stands for Value Investing Portfolio Service. Okay, for our VIPs like you. Okay, yeah. So the orange line represents the MSCI All World Index, which is a representation of a global stock market. And then the gray line represents the Straits Times Index, which is our home stock market index. Okay. So I just look at the returns. Over the full year, we managed to edge out the global stock market by about 3%. And then we managed to outperform our local stock markets by about 20%. And the reason of that is 2 parts. First part, it was from January to March. As you see, our portfolio hardly have any gyration, any fluctuation. From January to March was the COVID period. Okay, and then it reached the trough of it was 28th of March 2020. Okay, and you see the global stock index and the Straits Times Index generally declined by about 20+%. Mm-hmm. And I'll say, thankfully, we were well positioned coming into the year. We kept 25% in equities and the rest in cash and gold. And hence, the portfolio was very, very well insulated against the COVID-19 crisis. As you can see, it didn't even move down. It stayed at 100%. And then when the COVID is over, it started. That marks the second phase. So the first part was really about assets allocation. You know, if we did not stay defensive coming into the year, I don't think we can achieve this year's results. And we have the reason to be defensive, especially being very careful, taking care of all your portfolio. Okay, the second part is subsequently asset selection. As you can see, the Straits Times Index had a flat year, so it didn't really kind of recover until October 2020. Whereas I'll say the portfolio that we have together has started to appreciate since the trough of the crisis in March. And that boils down to correct asset selection, selecting the right kind of assets for the right environment, which allowed us to perform about 18-19% for the full year, which we're very happy to share with you.
Thank you, Kim Wei. So I have a question right now. So given the good results in 2020, would it still be a good time to invest in 2021?
Okay, thanks, Tammy. But I think that's a very good question, because I think what you shared is probably on what most people's mind, which I'll definitely answer that. But let me just go a bit outside of that first to paint the overall picture before answering your question directly.
Sure.
Okay. I like to put it on a very broad scale. What kind of world are we in today? Okay. I put it in two separate things. We're in the era of cheap money. I just take Federal Reserve, the US Federal Reserve, which is a central bank, balance sheet as an example. Okay, their balance sheet, the growth of their balance sheet represents the amount of money created in the USA. Okay, in 2007, prior to the subprime crisis, the central bank balance sheet was at about 900 billion. Guess what's the number today?
Oh, I have no idea.
Okay, the number is 7.4 trillion. It has increased 7 times, from 900 billion to 7.4 trillion. An increase of 6.5 trillion. How much is 1 trillion? Maybe, by just saying a trillion, it might not mean much to you. Let me just share. A trillion is a 1 with 12 zeros behind it. If a person were to be spending $10,000 a day, well, that's quite a lot of money, right? Spending $10,000 a day, it would take the person 300,000 years to spend $1 trillion. And that's 1 trillion.
300,000 years, that would mean, let's say I only live 100 years. That's what, 3,000 lifetimes?
Yes, and that's assuming spending a $10,000 every day.
Every day for 3,000 lifetimes.
Yeah, and we're not talking about 1 trillion. 6.5 trillion of money has been created over the last 13 years.
I see how you say it's an era of cheap money.
Yeah, and cheap money is really cheap because when you put your money, I've really tracked my money in the savings account in DBS. As the interest rate was rising, my interest rate in DBS savings account or POSB savings account never increased. It has stayed at 0.05%
for so many years. Yes.
Yeah, and hence I say the first part is about putting all our money into cash is not a solution, because the long-term projected inflation rate in Singapore is about 1.5%. With a savings account of 0.05, which I can run it off to zero, our money is depreciating by at least 1.5% guaranteed per year. And that is not a pleasant place to put money over a long term, a guaranteed loss of 1.5%. Would you invest your money in a guaranteed instrument losing 1.5% per year?
That's quite unwise.
Yeah, I don't think it'd be very wise. But a lot of people do that subconsciously. But let's talk about the reverse. Well, since it's not a good time to put money in the bank, what about if I take it all out and invest? Let's look at it. Because with this era of printing money, I would say the speculation has been a lot more rife. Okay, I shared with two examples. First, on the left side is margin debts. Margin debts means people taking on debts to be investing. As you can see on the charts there, on the left side, on the right part of the charts, we are at all-time high, and the upward movement is quite parabolic, which means people are borrowing a lot of money because it's cheap to borrow. And of course, sometimes being influenced by salespeople, to be borrowing a lot of money to be investing. And hence, when we have a lot of debts, when I buy an asset using debts, it's no longer my prerogative to hold the assets. Because if the asset value drop, the bank will call in margin call, or the broker will have a margin call. Like it or not, I have to sell my assets. And hence, when market falls, it becomes very, very fast. And that's I think, what is going to happen in the years ahead. When you see a downturn, it's going to come super fast. On the right side, SPAC. What is SPAC? SPAC stands for Special Purpose Acquisition Company. What are they? Another name for it is blank check company. It means companies that are set up, they IPO, and they got no business. It's just a promise that with your money that's given to me, I will find a business to invest in. With no promises. And people are pouring money into such blank check IPOs. You can say it's 50 billion last year that's poured into such SPACs, SPAC, for in a purpose of finding hope. I just share one company, for example. I think it's interesting. Okay, so speculation is rife. This company is called QuantumScape. I think last year was all about electric vehicles. Tesla's share price went up about 6-7 times. Okay, QuantumScape is a company that manufactures solid-state lithium battery. Or rather, I won't say manufacture, it's going to manufacture, or it promised to manufacture, with the technology to have this solid-state battery. Okay, of course, what it can do is it can power the electric vehicle much further. Okay, and this company kind of IPO'd in September 2020 at $9.80. Tell me, you want to make a guess? By end of the year, Christmas of 2020, from 980, how much did the share price go up?
So you put your hand here and here, so I'm guessing it's like 4 times higher or something.
4 times. I'll show you. So this is the chart.
Wow.
Okay. So at the start, this was near the IPO, $980 per share in August 2020. By Christmas time 2020, the share price $114, an increase of 11 times over 4 months. 4 months, bear in mind 4 months. So, and most surprising of all is that this company, look at this company, what is so special about this company's profit and loss statements? Can you see what's so special about it?
Okay, my eyesight not very good.
Anyways, for you to have a look and ponder, let me review the answer. Do you have the answer?
Yes, go ahead.
Okay.
I'm trying to read the small numbers over here.
Okay, the answer is this company is revenue free. Do you realize this company has got no revenue? It only has costs.
Yes, exactly. Where is the revenue segment?
So this company promises to be making solid-state lithium battery by 2024. So we don't know what kind of competition are there, whether they can successfully really roll it up. So it's a concept, it's a promise. Yet the share price has gone up 11 times without even a single dollar of revenue. I'm not saying this company will definitely not succeed, but what you can see is the underlying speculation behind such companies.
It's like a gamble, isn't it?
Exactly, Tammy. So that is the world out there with plenty of cheap money, trying to find its ways, to make better returns. It's been so a lot of speculation. More recently, like last week, was this GameStop. Share price going up 100%, down 50-60% in days. So that's the kind of speculation that has been ongoing. And I think that will continue. So I think we need to really be very conscious that asset prices is going to go up and down quickly for no reasons. So let's not get too overly disturbed. Later I'll share a bit more wisdom into how to deal with this.
Sure.
Okay. So to answer your question now, Tammy. So if you say to invest into a direct stock, then I would say, if it has gone up like 10-20 times, maybe you would have missed the boats. But if you do an asset allocation, in fact you never miss the boat. Anytime is a good time to be investing into a diversified portfolio.
That's actually a very interesting line. Anytime is a good time. Would you elaborate more on that?
Sure.
Like, anytime is a good time. I thought investing timing is really important.
Sure, Tammy. So I will really answer your question through the next few slides I'm going to share. First, I want to give an example. Tammy, if today you come to me and you say, hey, Kiwi, I want to sell just winter clothing, but winter is ending in 2 months' time. Shall I still open the shop? Because time is running out. Just like a question, time is running out for equities. Let's say it's gone up a lot. Shall I still get in?
Well, if I'm going to start now in January and I know the winter is ending, it certainly doesn't seem like the wisest choice, right?
Yeah, exactly. I agree with you. But what if I tell you, instead of just a winter clothing shop, you now have a 4 seasons clothing. Yeah. You can sell winter time. You can sell winter clothing. Springtime you can sell spring clothing. Would it then still be too late to open a shop like that?
Then timing is not that important.
Yeah, exactly. Yeah, because just like investments, if the season for equities is kind of tapering, then we can always reduce that and then move into other asset class. Although it's usually not as straightforward as the 4 seasons that we see, but we can still have an indication of what environments are we in today, and then allocate our assets accordingly. I'd like to go through, maybe I'll share with you first. What do you see here? How often do you see this?
Money on the street.
Yeah, a pile of cash sitting by the side of the pavement. How many of you have seen this before?
And nobody's picking it up. It ain't gonna happen in Singapore.
Yeah, I said unfortunately I don't have the luck of finding this. Even if I find it, I may not be able to pick it up. I really don't know what is there a lure, for me to pick it up and then somebody will handcuff me. Okay. So I said, we haven't seen this. What am I trying to say is money never get lost in the system. That's why we don't find money lying on the floor. Money are not lost. Money merely get transferred. Yeah. And usually from the ignorance to the wise. Yeah. So ignorant people always lose money. I lose money in investment. I lose money in investments. You have never really lost money. You have merely transferred your money to someone wiser, because of our ignorance.
True. Yeah. Now you put it this way, it sounds, yep.
So I hope that, that because with asset allocation, then money merely get transferred from asset to asset. Yeah, it doesn't get out of the system. Especially, in fact, money get injected into the system because of the money creation, as I shared with you just now. Okay, so asset allocation means we actually put our portfolio into various asset classes. Cash, fixed income, which is bonds, stocks, real estates, commodity, and gold. Because each of them may shine in different seasons. Of course, we don't try to pick one and go 100% on it. However, I think we want to have a gauge of the environments and then overweight the assets which we think are suitable. And how useful is this? Okay, let me go through history to share with you. 100 years history in USA. But before that, I just talk about 3 risks. The 3 risks which we want to be really help our clients and ourselves to be mitigating are inflationary risk, deflationary risk, and black swan events. Because high inflation and high deflation periods are not good for stock markets usually. And then black swan. Black swan are sudden events which we don't expect, but it has a very, very significant and sharp impact. Okay, let me show you a few history and then how we mitigate these 3 risks through asset allocation. Okay, this is a 100-year chart, from 1896 to 2016 in the Dow Jones in USA. Okay, I want to look at there are 3 periods, but I want to look at just the first 2 periods. The first period, if you see here, is a deflationary period.
Yes.
Okay, it's a very famous period in US history called the Great Depression. So you see the chart there. Tammy, you want to make a guess? If a person invests right at the smack at the peak in 1929, how long did this person have to wait to get back his money? How long was that first line down there, the horizontal line? Make a guess.
I can't really see the number, but it looks like decades.
Yeah.
It looks like, decades. I cannot tell how many though.
Let me unveil the answer. Okay, sorry, it's a bit small. I read to you. So it's 25 years. An investor has to wait 25 years just to get back his money. I repeat, just to get back his money.
That means, let's say if I start investing and I'm 25, I need to wait until 50 years old before I get back the same amount of money. I'm not even earning money.
Exactly.
Tammy will be old by then.
So I shall unveil Tammy's age. You just add 25 years to your current age. And if today we are in this period, we will never know what period are we in unless with hindsight. Add 25 years, and that's how long you may have to wait if this repeats itself.
It sounds a bit scary because I will never know until I can look back in history. I never know whether this period will actually recover or how long it takes to recover.
Exactly. Yeah. And 25 years is a good news. In the midst of it, you never know how long it is going to be like.
That's a little scary. Okay.
Okay, but let me share, let's say with asset allocation, how is this going to help? Okay, if we talk about another class of assets, which is bonds, okay, the US Treasuries. Okay, so this is talking about the yield. When this chart goes down, means bond price comes up. So you can see that actually bond price went up 106% inclusive of coupons over the same 25 years. So bonds made money over these 25 years. Okay, so if assets allocation, let's look at the top part. Okay, so let's say if a person in 1929 put in 100,000, 100% in equities. Okay, by 5 years later, by 1934, the rate number there, 25,900. So 5 years later, he would have lost 25%, or 75% of the value in the portfolio. And as I said just now, we had to wait 25 years to get back to 100,000.
25 years.
Yeah. But if you look at the bottom, okay, let's say we have a spread of assets, okay, 50% equities, 20% gold, 15% bonds, and 15% cash. Yeah, so we're going to start with 100,000, but 5 years later, when the stock market dropped 75%, the whole portfolio would only have dropped about less than 20%.
Okay.
Yeah, at the end of 25 years, you actually made some money. Okay, a bit is really not a lot, about 20%, but it would have made you some money. Okay, so that is about asset allocation passively. The next chart may be a better news, even better news. Okay, so this is a depiction. Yeah, so you went down much lesser, and then it made some money at the end of 25 years. Okay, let's look at the next chart. Next chart involves a bit of this active switching or assets reallocation. Okay, the top part is the same thing. It represents the Dow Jones going from 100,000 to 25,000 and back. So the bottom part, the first 5 years is the same. So it dropped from 100,000 to about 80,000. And assuming at the bottom of, or rather in 1934, what we do is we decided to add some money to equities, add some money from bonds to equities and go into equities. And we move into this allocation. Okay, I wouldn't say 100% equities because we don't have the, we don't know what will happen at the time. But when prices are cheap, and that's embedded into our Unicorn investment framework already. Now, when assets are cheap, we want to be buying them. So let's say I just increased my equities allocation by 20%, which is really not a lot. Guess what's the difference to the portfolio? Let's take a look. Okay, yeah. At the end of 25 years, yeah, you would have made, I'll say, some decent money. Yeah, you would have doubled your portfolio. Again, still not a lot, but it's definitely much, much better news. Because if you look at this chart, you would have get back your money probably around the 6-7 years. Yeah, the wait is not as long as 25 years. That's number one. At the end of 25 years, you would have about doubled your portfolio. Okay, so I think that's the power of asset allocation, yeah, which is often very underappreciated in good times. Yeah, and hence I think that's what I'd like to share with you, Tammy. That asset allocation doesn't mean no volatility. Yeah, but it means is at any point of time, risk, you can insure against your risk, you can reduce the volatility, and to be making good money over time.
I see. Thank you, Gateway, for sharing. I think I learned something from this particular example. And friends who are listening, remember to open up your ears more and remember these points because, like I said, later we're going to have a game. So continue to listen to Gateway because all the hints are right here. Okay, thanks, Tammy. So I just want to show this second part. Okay, so the second part is the second line down there, which is inflationary period. As I said, the first one was a deflationary period. The second part, which is from 1966 to 1982, was an inflationary period. So again, you have 16 years and the stock market didn't move up at all. So you have to wait 16 years, again, just staying put with what you have. And interest rate went up to double digit during this period. Well, so if you have stock, after 16 years, you didn't make much money. But what if you had gold? Yeah. Like bonds is a good deflation hedge. Gold is a good inflation hedge. Yeah. So when during this period when stock was flat,
Gold price from 1970 to 1980 went up from $36 to $678, and 18 times increased. Yeah, and that's a lot of increase. I mean, while stocks are flat. Okay, so I think that is again having an inflation hedge in your portfolio will help us to insure against high inflationary environments. Okay, so I think I'd like to sum it up in asset allocation is Unicorn's portfolio are designed to make you good money while hedging the shock of inflation and deflation. Okay, I still have my last sentence, but I'd like to just expound on this first. I'll give an analogy. Maybe I ask you a question first. How many of y'all here don't have a single insurance to your name? Yeah, how many of y'all? Okay, I guess very few or maybe none of y'all, unless you're maybe very young or you haven't bought your insurance. I myself have. Okay, I have to say, if today I didn't buy insurance, I would have been richer. Because I didn't really claim any money. Yeah, so I definitely would have been richer, not paying all those premium. Would I dare to do that? Would you dare to do that?
I won't, because you never really know, right?
Yeah. What if today I can't work because I'm disabled, I have critical illness, I don't have insurance? How will I feel? I don't think I want to take that risk. Yeah. So it's asset allocation is like buying insurance on your portfolio, on your investments. What it means is in good times, when it's a raging stock market, bull market, we've got to be prepared to earn lesser. Yeah. It's just like paying premium on my insurance. But if there's a big crisis, which is like, let's say I got critical illness, or I got disabled through an accident, then at least I'll be comforted. I have a few $1 million that will be paid out to me, and I don't need to worry about my finances because I can't work for the rest of my life after that. Yeah. So again, that is something I think is not something I say I want you to feel obliged, but I really want you to think about it. Yeah. That is it worthwhile to pay some premium, insurance premium, for your investments in good times to insure you against the unforeseen bad times. Yeah. If it's worthwhile, then asset allocation should be something you want to think about.
So to recap, that means if I want to feel safe, I should actually consider asset allocation.
Yes.
Cool. And your ... means?
Okay, the ... is, okay, and make this black swan your pet. Don't be scared off by the black swan, okay? Black swan are there. We can manage it. But it represents humongous opportunity when black swan happen. So we've always got to be ready for the black swan. Keep some cash aside, such that when it's time to be buying, there will be opportunities galore. So let's not worry about the black swan, but make it your pet. Love it. And I'd like to share this wisdom here, which just now I shared, how to then overcome this period of speculation. And how to make black swan your pet. It is ordinarily for most people, we can't do that unless we have this mindset. I've put it in Chinese, 人无远虑，必有近忧. When we don't look far, and we want to be concerned ourselves with the day-to-day gyration, I can almost guarantee you cannot pull yourself away from the terror of the black swan. Because when you see your assets dropping down 50-60%, you almost certainly want to avoid that pain. And maybe sell your investments. Or maybe you never even dare to invest in the first place. So I think we always need to look far. We need to be prepared, keep sufficient cash, and look far. Okay, so I think that is what I'd like to share with you.
Thank you, Kiwi. I think just this first segment, I already learned a few things. I have so much more questions for Kiwi later, but meanwhile, I would love to hear what you have to say, the audience over here. So I have a poll coming up. So maybe we can flash the poll over here. So the next slide. My first questions for all of you, okay? What is your largest asset allocation at the moment? So what is your largest asset allocation at the moment? I have 6 options over here, like the ones Kiwi mentioned is cash, is it okay, what are the 6? Maybe Kiwi will ask, read it for me.
So we have cash, we have annuity or bonds, we have stocks, property, Unicorn managed funds, or for those who are our clients, and then gold.
I know I can click now. So you can answer these questions on the poll, and then I have a second question for you as well after answering this question. Once again, this question is, what is your largest asset allocation at the moment? So I know some of us have a variety, but what is your largest? So maybe we can flash question number 2. So the next question will be, are you comfortable with your asset allocation? Yes or no? So now you know that's your largest asset allocation. Are you comfortable with your asset allocation, your current asset allocation right now? Is it a yes or a no? Let me know what the poll is going on. I would like to let you know. I know we have some questions that we might like to ask Gateway, or some really burning questions, or some questions that you need like a long answer. Either you can ask in the chat over here. Our admin will try to answer you. Alternatively, at the end of the segment, we're gonna just give you a feedback form. So I highly encourage you to fill in the feedback form. Tell me how well we have done or how unwell we have done. And at the end of it, you can ask the question at the end of the feedback form. And then our consultants will be making arrangements to have a separate session with you to address your concerns. So meanwhile, is it time to look at the poll results? Okay, the poll results. So the poll result is up. We have actually 21% of people say cash is their largest allocation. We have 21% also on property, 3% on fixed income, which is bond and annuity, and then we have 14% on stocks, 1% on gold, and 39% on Unicorn managed fund. Oh, bravo everybody, bravo. Actually, my option also the same. How about question number 2? Are you comfortable with your asset allocation? Yes or no? We have a whopping 75% of us saying yes and 25% saying no. Thank you for joining in my poll. Okay, wait, do you have anything to talk about for the poll results?
Well, I think I'm happy to see that most people are happy with where they are. Yeah.
Okay, wonderful. I love this. Okay, friends over here, if you have any questions you want, you can continue ask us in the chat over here. Meanwhile, if you have any comments like, oh, Kiwei, today your red tie very nice, you can say in the chat also. You can say, but you must remember to click on all attendees and panelists so that all of us can see, right? If you only go to only one segment of us, maybe I cannot see, or maybe the audience cannot see what's going on right now. So while we are here, let me continue with my other burning questions while Gateway is here.
Sure.
Segment number 2, okay? Are you ready? Do you want to drink water first?
Okay.
Okay, cheers. It's time to also showcase my Chinese New Year stuff behind, because we actually arranged it for the Chinese New Year theme. So friends who are just joining us, by the way, we are continuing our sharing section with Gateway, and at the end of it we're going to have a game segment, so listen carefully because lots of hints will be through his sharing. Also at the same time, if you want to chat, just go on to click on all panelists and attendees. That's where I can see your comments over here. So we have friends saying hi to us in the chat. So a lot of people have said different views, you know, like what's your view on cryptocurrencies and so on. We will continue that later. Meanwhile, my question for Gateway. Okay, before we continue talking about 2021, because that's the theme, you know, for today's segment, let's chat a little bit more about 2020. Ken?
Okay, sure. So besides sharing the results, the reason of it, I think I also am happy, you know, as a steward, to be sharing about some progress we have made at Unicorn, such as to make sure that we can continue to be having very safe yet decent and good results for you all for the many years to come. Okay, so the development and progress since last year, and they're still ongoing. Okay, firstly, I'd like to share first. Previously, so we work within Unicorn, that means Unicorn Investing Committee. We do the asset allocation, we do the asset selection. You know, we choose the stocks, we choose the funds. And then starting last year, we thought that, you know, in order to do well over time, we need to expand our capability. To be able to have reach to the advice of veterans, people who are the veteran fund managers, people who has been managing sovereign funds like the GIC, people whom has been veteran investors themselves. if we can get their wisdom and their knowledge and their experience into managing our portfolio, I think that will make our portfolio much more robust. And hence that's what we did last year. We started to look for portfolio management consultants. Yeah, so there are people, as I shared, we really have one. Also, we are people who have who are veteran fund managers. There are people who have managed sovereign funds. There are people whom are veteran investors themselves. Yeah, and they are happy to join us because they see our vision of wanting to do well for the men on the streets, the heartlanders. Yeah, and hence they felt that it was a mission that can be doing good to people. And hence they joined us to be our portfolio management consultants. And the two benefits is firstly, as I shared, enhanced resources and capabilities. And secondly, precision in asset selection. So in the past, we do broad asset allocation, equities, bonds, commodities, but we don't go deeper into it, like stocks. What kind of equities is favorable for these moments? Because equities is not homogeneous. There are different types of equities as well. And hence, with the aid of these experts, we get more precise in our asset selection and portfolio and allocation as well. So these are the benefits we had to progress our investing committee to serve you better in the years ahead. So what we really want is our desired asset allocation. Okay, I'm not saying it's definitely these percentages, but what I'm trying to say is, in the past, it's an analogy like we have a soccer game. Okay, pardon me if, for those people who are not as acquainted with the soccer game, or you can just use any ball games for example. We are like a ball game with one star striker. Only one person scores goals. The rest cannot score goal. So what if this person gets injured? And that player is called equities. So we rely on equities to make money. And sometimes we have to scale our equities a lot. When we think it's not favorable for equities, we scale it down to very low as 10% in equities. Or we can go 100% in equities. So that's what we did in the past. So going forward, we really want to have maybe still one star strikers, which is the equity, but the rest of the team can also score goals. So we're not heavily dependent on just one player. So now we wanted to have other assets like bonds, gold, and we are looking even for more market independent assets to be adding onto the portfolio. If we can manage to get past the regulation, then to get it approved, then we can put onto the portfolio. But that is our aim, to create a portfolio with a diversified stream of uncorrelated returns. So that's really what we want to be doing for our portfolio over time. So that's what we've done in the last year and this year. So then to your questions into next year, after sharing the presents, how about 2021? How is it going to be like? Okay. So I said I'll give you my view. Again, the world is very dynamic. Things can change. I'd like to share with you what I see, what I know, so that, as I say, we always want to have an open communication with you, our friends. So I think I just sum it up first at a very broad picture. I think likely scenario for 2011 and 2021 and ahead is more of the same. However, I think we're going to have a bump ahead. What is this bump? To share in summary, this bump is, I think, as the world get out of this lockdown situation, or she might not even be 2021. Okay, it might even be 2022, with the vaccine being more used by more people, and then the economy can reopen. I think we will face a situation where there will be a squeeze, supply-demand imbalance. Because demand, I think, is going to climb up because of pent-up demand. I just use an example. SIA, once they wanted to do this flight to nowhere, go into an aeroplane and then enjoy aeroplane food. Okay, I don't know how good it is. That idea did not intrigue me. I mean, I don't really enjoy airplane food. It's just a necessary to get me to where I am. So I wouldn't pay money, a few $100s, to go to the plane and eat food. But I think that's what we will see. People, this is when people can travel, or they'll want to go and travel, so on and so forth. Okay, so I think there will be a demand. Yet because of this lockdown, supply chain may not be able to restart immediately. Companies that close down might close down for good. Yeah, and they just can't restart it. Yeah, it may take time for people to come and set up a new restaurant, you know, to be able to cater to that demand. Yeah, so I think that's the bump ahead. But after this bump, I think we're going to go back to more of the same. Okay, this is a summary. Let me get to the details of it. I look at 4 factors, which are called macroeconomic factors. Okay, growth, interest rates, liquidity, and inflation. Okay, so I look at each of these factors in 2021. Okay, 2021 in growth, I think we might get back to close to pre-COVID levels. Things are going to get normalized unless vaccine prove ineffective. Because this crisis is all about this COVID-19, right? Of this lockdown, people cannot spend money. And if this vaccine starts to prove effective, people dare to take it, and they start to dare to go out, then it may start to recover. Okay, I'm putting 2021 as a gauge, so it might be even spread to next year. Okay, but this is something we will see. And then beyond that, then I think economic growth will be similar to that of post-Great Recession, which is 2009 to 2019, which was one of the slowest post-recession recovery. Okay, and there are good reasons for that. Okay, later I'll share in the part of inflation what are the reasons for that. But in a nutshell, that is about growth. Okay, a bump and then back to normal. Next, about interest rates. Okay, so I think interest rate, the central bank is bent to hold interest rates low, because they're borrowing an ever increasing amount of money, and hence they have to pay interest on those money they borrow, and they might not want. And secondly, low interest rate has the ability to inflate asset price. Today's unfunded liability in USA is 160 trillion. Just now, if I remember 1 trillion, how much is it, right? 160 trillion is unfunded liability. What are unfunded liability? Unfunded liability is like pensions. So they promise to pay out money, but they actually have no money to pay out. So they cannot honor their promise. And that whole today, 160 trillion. And the number is running. So I think by inflating asset price, relative to these unfunded liabilities, probably can kick the can down the road. And I think what we can see firstly is from Jerome Powell's speech. He wanted to be keeping interest rate low. I'll show you in the next slide. And secondly, through what he did in 2018. Remember in 2018, at the end of 2018, Jerome Powell was saying, we will increase interest rate from here, and money contraction, which is quantitative tightening, will go on autopilot. The moment he said that, the stock market tumbled. And a few weeks after that, he basically turned 180 degrees and said that, well, we're going to put money contraction on hold, no longer on autopilots. Subsequently, he also put interest rate on hold. And less than a year after that, he actually cut interest rate rather than increase interest rates. So he pivoted very quickly. It might be something terrible he see that that made him want to change his path. I don't know. But I think since he's been there and he reversed so quickly, I think he will be very reluctant to go to that path again. Increase interest rate early. So I think he's going to delay increasing of interest rate for as long as he can. So this was what he said in the Princeton University in a web symposium, just in 14th of January this year. So he said when the time comes to raise interest rates, we'll certainly do that. And that time, by the way, is no time soon. Okay? So and again, he says that he's going to keep interest rate low. Next on liquidity. So today, the Federal Reserve is pumping in, or creating money in the measure of 120 billion per month. Okay, 120 billion per month. So again, Jerome Powell, chairman of Federal Reserve, so he said that now is not the time to be talking about exits from the 120 billion in government securities the Fed is buying each month. A lesson of the global financial crisis is be careful not to exit too early. Okay, so again, he's telling you that well, we're going to pump money into the system for at least a while more, or maybe a long time more. So I think this cheap money syndrome I shared at the beginning will continue, and speculation will be there. And he has a it also has the ability to push up asset prices further. But at the end, but in a relatively heightened risk environments, because prices are high, propped up by a lot of debts. Okay, so that's a liquidity situation. So usually if this liquidity coupled with low interest rate has the ability to push up asset prices. Now the last one, which is probably also I feel the most important, which I want to take a bit more time to be sharing, it's called inflation. Because inflation has the ability to be the game changer. Now the Fed has the ability to keep printing money, to keep interest rate near zero for as long as inflation is kept in check, which so far it has. Okay, the moment inflation starts to go up as a trend, not as a blip, the moment it goes up as a trend, that means it goes up to 2%, 3%, 4%, then the Federal Reserve might have to stop the game. It might even have to U-turn on its game. I'll give an example. If today, you want the engine to be smoother, so you add fuel, engine oil to the engine. Okay, so the engine gets smoother. This economic engine gets smoother and it runs through money printing. However, what if I I make a spark in the engine area? Would you dare to be adding engine oil into the engine? Well, I think I'll quickly drain the oil. Otherwise, the whole engine is going to go on fire.
Yes.
So that spark is inflation. The moment inflation starts to spark and turn into a flame, the Federal Reserve can no longer pour more engine oil into the engine, because it'll be dangerous. In fact, they may have to withdraw that oil. Fortunately, I think that is a risk, but I think might not be the scenario that will happen, in my view. Okay, but we got to be very, very watchful. Let me share with you 3 types of inflation. Okay, there are 3 types of inflation. First type of inflation is called monetary inflation, which we have been having a lot of it already. I'll share with you more what is that. Second is cost push, demand pull. Monetary inflation is the inflation of assets. So you see stock price goes up, you see property price goes up. Okay, and this is the inflation so far we've been seeing. Why? I share with you the main reason. The main reason is because the money is stuck with the rich. And when rich people have money, what do? They don't go and eat 100 meals a day. They're still human beings after all. Rich people are humans. Maybe hardworking humans, but they're human after all. Okay, so they still eat 3 meals, but the money goes into buying assets. So they buy another property, they buy stocks, they buy other companies, may buy luxury goods. So these are the areas we've seen inflation. Like in 2020, luxury watch price has gone up, it didn't come down. But the other 2 types of inflation, which is cost push, due to like what happened in 1980s, where OPEC cut oil supply and oil price spike up, which vibrates through the whole economy. So prices goes up because supply is contracted. Or it could be due to demand pull, where the economy is getting heated up. Employee starts to ask for more pay, commodity price, steel price, copper price starts to go up, and then price of raw material, of general goods goes up. And we didn't see this through the last 13 years. Because as I said, rich people still eat 3 meals, still drive 1 car at a time, still sleep on 1 bed every night. So they don't cause inflation in these areas, food, transport. However, what could change this game? This game would change if the money starts to flow to the man on the streets. How could it happen? I can think of 2 ways. One is through a lot of infrastructure products, government spending, let's say infrastructure building. So if they want to build a lot of things, create a lot of employments, then it might cause an inflation. A demand pull inflation. Or if they start to print money and give people, that means really print and give people money, then that will cause inflation. Because if I tell you at the end of today, our government is going to give everybody a $1 million paycheck, I can tell you by end of today, inflation will be spiking up already. You don't need tomorrow. People will start ordering. Hey, I want to buy my car. Order for me first. I'll pay. when a government the check of 1 million comes in?
It ain't gonna happen.
Well, we don't know. At this moment, we don't think it's going to happen. If it happens, then we'll see inflation happening, the core inflation, which is where Federal Reserve usually is more concerned about. And that will lead to rise in interest rates, contraction in money supply, and the whole money game, investment game, is going to go opposite direction. Okay, I'll just go very quickly why I think inflation will not be spiking up. Firstly, we are having a shrinking and aging population for most developed countries or a wealthy nation. And to have demand pull inflation, then it's demand. Yeah, but if there are lesser and lesser people, means there are lesser and lesser aggregate demand. And economic-wise, that will actually it will not cause inflation, but rather a deflation. Secondly, debt trap. Well, when more money is printed, actually there's a diminishing utility of debts.
True.
It does not, so it goes into less and less productive assets. It goes into fueling zombie banks, zombie companies, and it does not spur economic growth. And thirdly, technological disruption. So technological disruption, I think we see in our real life, it reduces cost of living. I'm not saying standard of living, it reduces cost of living. For example, in the past, if you want to read a news, you got to buy a newspaper, you got to buy a magazine. Today, most of these are free. You don't even need to subscribe. Some you might, but a lot of it you don't need to subscribe.
Yes, yes.
I've been a beneficiary. I believe you as well.
Yes.
And all this reduces cost of living. I'm just using one example. But I guess if you look at our life, we have seen cost of living reducing because of technological advancements. And that will continue. So I think my likely scenario is inflation is going to go up when this lockdown is over. But then long term, it's going to come back down like what we've seen in the last 13 years. Yeah, so that's what I'd like to be sharing about 2021.
I have a lot of questions coming on from our audience actually. So we may not be able to touch all the questions depending on our time, but perhaps I can choose one or two just to answer short ones perhaps.
Okay.
Can we?
Maybe tell me, I just finished it, but I think I still
yes.
want to share about the asset allocation in 2021. I almost forgot. Okay,
Let's go ahead with that, and that's very important. I also want to know about that too.
Okay, so I think we wanted to have a really well diversified assets. And I talk about wise diversification, not blind diversification. Again, a wise diversification, not blind diversification. Blind diversification is when I don't know what to do. Hey, which stock you want to buy? I don't know what to choose, I just buy both. Even one may actually be a lousy stock. Wise diversification means we look at it, things that are lousy, put aside. We only want to diversify among things which we feel are suitable and high quality. So let's look at it. So we wanted to continue to be in structural growth equities. These are companies that are highly relevant for the future, like semiconductor manufacturers, like the technology company, the healthcare companies. I think they're long-term winners. So they'll be volatile, but I think long-term they are going to be the very relevant company and their earnings are going to grow. China, another country which is a country that we like for the long term, because I think they are going to be an economic superpower for the long term, and we want to be having it. Gold as well, because it's one of the best inflation hedge, and a safe haven assets. So that is to hedge against inflation. And we might want to add two things this year. One is it's a cyclical and defensive type of equities, which has not had its run up that much, compared to the growth company. So we may want to find opportunities to be buying such company to be benefiting from the recovery story. And then we may want to add bonds, but a very specific bonds, China government bonds. Because today China government bonds, which give about 3% interest rates. The 5-year Chinese government bonds. The Singapore 5-year government bonds is only 0.4%. So it's a good 6 times more. So I think we are paid reasonably. And I think longer term capital will flow to Chinese assets. So I think having some China bonds will be a good deflation hedge. So then we have long-term winners plus deflation, inflation hedge, and some safe haven assets, which is cash. So I think with this, that's where we will be comforted. No matter what the situation ahead, we think we can weather it very well.
So Kiwi, over here, this is the percentage you think it's desired, right? So you will also I mean, that's a question for myself. You're also, depending on the current situation, decide like what's the actual amount or percentage. Okay.
Exactly. Yeah. It's not the actual. Yeah. Just a gauge. Yeah. For you.
So, what is the asset class that are suitable then for me and everybody else or us?
Okay. I think this is for us to really ponder a bit. Okay. I just go back last 12 years. Once I asked my colleague, actually what kind of assets, because we do financial planning, we get to see our client's portfolio. So we know roughly what most Singaporeans have in their balance sheets. Okay, and these are usually the ones. Okay, cash, annuity, Singapore property, Singapore stocks. Some have global stocks. And of course, our clients would have Unicorn, our portfolio inside them. So I just wanted to let you all see, over the last 12 years, or the last 8 years, I just use from the start of Unicorn, 2012, till today. If you put your money in the bank, it will give you 0.05%. No change over the last 13 years. If you put in annuity, okay, I use a private annuity as an example, it will give you about 2.2%. Singapore property, this is including rental. Yeah, actually since 2012 to today, all in, your return is 2.1% per year. The Straits Times Index, including dividends, you get about 1.9. If you put into the MSCI All World Index, in fact, you get about 9.2%. Okay, Unicorn portfolio, as I shared with you much earlier, is about 6.6% per year. Okay, so that is the return characteristics 2012 till today. Okay, I also put the liquidity characteristics. Of course, cash 3 pluses because it's always the most liquid assets. Liquid means you can use it anytime without any depreciation in the value. Okay, annuities and Singapore property tend to be very illiquid assets. Yes. You can't really sell when you need the money. Okay, stocks I put 1 plus. Yeah, liquid, but you may not get back what your initial capital because it's volatile. Unicorn portfolio I put another plus because of its diversified nature, and we always have some cash in the portfolio. Then the last one is the inflation hedge characteristics. Okay, cash and annuity are non-inflation hedge. Yeah, that means like annuity, if you get $2,000 in the first year, 20 years later you still get $2,000. Yes. You don't get much of an inflation hedge. Whereas for good property in the good stocks, you get 2,000 first year. 10 years later, that same assets may be giving you 3,000. And you keep growing over time. That's what I call inflation hedge.
Yes.
So that is the various asset class. So I just want the last slide I have. So what happened if you put 100,000 invested into various asset classes? Okay. If you put in the bank earning 0.05, 100,000 30 years later it will earn you $1,000 after 13 years. Okay. If you put in annuity, it will about double your money, 192,000. That's about the same for property and STI. Both are all about just under 2% return. Well, the best is you would have put in the global stock markets. 100,000 30 years later will become 1.4 million. Okay, and if you put in a Unicorn portfolio, it will be about 700,000. But I like to first bring back, so will we want to put 100% into just a global stock market? That is like I say, well, living our life with no insurance. That's something I personally would not favor myself to do. Just put all my wealth, lock, stock and barrel into a global stock market.
And you don't know what stock to choose.
You might not know what stock, but this one we are using the MSCI Global. But for personal wise, it might not be this result because you might not choose the right stocks without proper research. So what you saying is also very right. So this is what I'd like to share with you. And this largely ends, I think, what I wanted to be sharing with Tammy and you.
So, I mean, looking at these, that means, let's say if I do it by myself, in Singapore terms, right? Most of us will probably go for like property and put some money in the bank, or put some in stocks. So overall, as I see most people, that's the pattern that we do. So technically speaking, I would not be doing it as well as compared to putting money in Unicorn. Is that the message I'm getting over here?
Well, I think it depends. Well, if you're a very good investor, I think you can do it yourself and perform better than Unicorn. I don't think that is impossible. However, I would like to just be realistic. For most of us, who have our work, who have our family, we need to exercise, take care of our health. We have our hobbies. How devoted can we be in our investments? Are we willing to spend our entire weekend doing investment research? Are we willing to spend time to go and talk to experts so that we understand more of what is this world like?
Yes.
So I think that there's a cost to it. So unless you're very passionate, and through your own history you've done better than 6.6%, then I think you should be investing by yourself, because it's your habits. It's your hobby, it's your enjoyment, and it makes you good return.
For me, it's definitely not an enjoyment looking at the numbers.
But otherwise, I think it's a cost to pay, because any hour spent invested in investment research, if you don't like it, it's an hour taken away from your job, an hour away taken from your sleep, from your family, from your exercise. Is it worth it? I think that's a question we have to ask ourselves.
So talking about that, we have questions for the audience as well. So time for my next poll. Right, okay, let's go into the poll that we have. So after seeing the characteristics of the various assets that we talked about, has your preference of asset allocation changed as compared, just now we asked in the poll 1. So poll 2, after seeing the characteristics of various assets over here, has your preference of the asset allocation changed, yes or no? And if it's yes, what asset allocation do you prefer now? So we have the 6 option just now that we showed. So the 6th option will be, do we have a slide for that? Perhaps everybody can take a look.
Okay.
Yeah, these are the 6 options. So let's say if it have changed already, which one of it are you looking at now? Which one do you prefer now? Tell us why in the chat group. So we will love to hear your comments. I know we have a lot of questions coming in. We might not be able to answer, but no problem. We're going to take note, our admin going to take note of the questions and then subsequently get back to you about that. Either personally or your consultant will get back to you about that. So looking at the poll, you can just perhaps show the poll results. Or you can see from the chat over here, like everybody's replying. So that's what some of us are talking about. So once again, if you're gonna change your asset allocation, right, which one would you actually choose? We have the options of, perhaps Kiwi can read for us the 6 options.
So we have cash again, or annuities or bonds, stocks, property, unicorn managed funds, and gold.
So remember, when you type over here, if you want us to see, you need to click on all panelists and attendees to see, so that we can see your answers. And meanwhile, while you're here, I will just want to prep you guys what's going to happen right after this poll. After this poll, I'm going to show you a video, then I'm going to do a short game. Actually, 2 games I'm going to play with everybody. I'm very excited about the games right now because learning so much things from you. Let's apply some of it in the next game that is coming up. One is purely by listening, from what Kiwi was sharing just now. The other one is purely by luck. Okay, I'm going to talk about the games a bit later. So meanwhile, while the comments are coming, maybe we can take a look at the video that we have prepared for you.
got to know Kek Lee, along with others within Unicorn, we discovered that they are genuinely interested in your well-being beyond financial matters.
Thanks for coming back. Looking at the video, obviously it's taken pre-COVID. That's why nobody's wearing masks then. So disclaimer, must say that, very important. But Giri, I wanted to ask, what was that event about?
This event I think we had about a couple of years ago. Yeah, so it's for our very trusted clients. That's on our securities advisory service. Yeah, we had it at Como Dempsey. So every year we have a celebration with them, a get together and celebration. Yeah, and like what we are doing now, to report to them, to our friends, about their results, about what we are doing for them, and then what's ahead. Yeah, because we always treasure this open communication. Yeah, that means we share what we know with you. Such that you know what exactly that we know. And I think in investment, that's a very important communication.
Yeah. Yes, and I agree. And that event looks very nice. And I think we had a virtual version of it, like a couple of months ago. Is that the same one?
Yes, it's last year. So we had a similar situation, similar session, and we did it over Zoom, like what we are doing now as well.
Oh yes, the one in September,
right? Yeah, still as well. Yes.
Yes. I was hosting the one virtually on September. And talking about that, we were playing games at the end of the session in September over Zoom, and then because the response was so overwhelming, a lot of people really liked some of our games. So we bring at least one of the previous games back today. So before I go talk about the games that we're playing, I'd like to let you know that over here we have two games we're going to play. The first one is the fastest finger first. So that means later when Kiwi was going to ask a question, the fastest finger to write the answer will win. But before I do the first game, I want to talk about the second game that a lot of people were waiting for. It's the game of luck, where it's about visual cues. So because of this, it's based on luck, and I need visual cues to actually see you. So if you want to join us for this game, as well as prizes is gonna be there also. We have 3 prizes for this game. So if you want to join us, quickly type in the chat and tell the admin that you want to join the game, and then we will allow you to on your video. So I only have 12 slots for you to join the game. So the first 12 person to say in the chat that you want to join game 2, and then the admin will allow you to be part of us to join game 2, where you can on your camera. So faster, go and type in the chat, say I want to join. So only 12 slots, because this is such a hot game we bring in back for this session as well. So faster, the first 12 slots to join the game called Visual Cue, which is game 2. So meanwhile, while you're doing that, I'm going to talk a little bit about game 1, which is very simple, the fastest finger first. So before I talk about that game, what are the prizes, right? Because we're winning prizes over here. I have some 保之灵 vouchers to give away. But what is 保之灵? I have a slide to show you. Okay, 保之灵 is actually just next door on where I am right now. So, you have to controlled by Gateway over here. So 保之灵 is actually TCM place. We are family serving family. So you won't be expecting like a very commercial kind of a setup. And we want to actually graduate our patients from the clinic as soon as possible. So we have 5-star medical services at only 3-star prices. And at 保之灵 over here, this is the location we are at. 538 Geylang Road, level 2-12, for a family style TCM clinic. And over here, what do? Okay, we have 11 people in our team of physicians, therapists, trainers, beauticians to provide you a holistic healthcare. And we have about 7,500 people or so visiting us yearly. So this is really just created for the family, the Unicorn family. So if you're joining us here today, you are part of our family as well. So if you have any issues, you will love to see the physicians over at 保之灵, feel free to do that. And meanwhile, the vouchers I'm giving, the prizes is 保之灵 vouchers. That means you can actually use it over here, or you can pass on to people, to use it. So the first game I am going to play is the fastest finger first. So later, okay, we will be asking 2 questions, 1 question at a time. So after asking the question, the first person who writes the correct answer in the chat, remember, to all panelists and attendees, that's how we can see it. So the first person who writes the correct answer, you will be the winner for the questions for this segment. So I have 2 winners, that means there's 2 questions, and make sure you need to wait until the admin type start. So the first answer after admin type start, and if it's the correct answer, you will be the winner. And the prize for this segment is a $30 voucher from Baozhiling. So are we ready to play the game giveaway?
Of course.
I'm very excited to give prizes.
What's the question?
Okay, first question. Okay, let me turn over. Is everybody ready? Prepare to type in the chat after admin type start. Okay, only after admin type start. Answers before admin type start not counted. Okay, not counted. Okay. So the first question over here.
Okay, the first question. What are the 3 risks that we may face in years to come? What are the 3 risks that we may face in years to come?
So whenever admin types start, you can continue to type the answer. And my question is, what are the 3 risks that we may face in years to come?
So you got to type all 3, yeah?
All 3, yeah? 1 not counted, 2 not counted.
Must type all 3.
All 3 must be correct, right? Okay, okay. The answers are coming in already. Has admin type start? Yes. Okay.
Wow. So we have Victor Tan. Victor Tan, we are friends.
Victor said deflation, inflation, and black swan. Is that correct?
Yes, you got it right.
Yay!
Congrats, Victor.
This one don't have video, right? It's the next one that we have video, right? Okay, congratulations. So Victor Tan, you have to contact us, contact admin. You can actually just private chat admin and then say that I'm the winner, and then we're gonna arrange to give you the prize. You won yourself a $30 voucher from Baozhiling. And then, are you ready for the question 2? Okay, question 2. Once again, you need to wait until admin type start. Any answers before admin type start, not counted, okay? Fastest finger first. Okay, Gateway's gonna ask the question right now.
Okay. Second question. If you invest in Dow Jones at its peak in 1929, how long does it take for your investment to break even?
So let's read the question again. If you invest in Dow Jones at its peak in 1929, how long does it take for your investment to break even?
Okay.
The answer's coming in, but I can only have the first one after admin type start, and that will be Wei Hong.
Congratulations, Wei Hong.
The correct answer or not? 25 years.
25 years. 25 years is the right
yes one.
Answer.
Okay, but to make sure it's correct, I need to play a video, right? To rewind and then see what Kiwei says just now.
For an investor who invested at the peak of the Great Depression in 1929, he would have to wait 25 years just to get back his original capital. Or wait a full 25 years to get back his original capital.
Yes, looks like the answer is correct. Congratulations. So you have to contact our admin, and then we will arrange to give you the $30 Baozhiling voucher. So now, are we ready for game 2? Do we already have 12 people that it's already arranged? So for friends who have already been the first 12 people who are going to join us for game 2, I will need you to on your video over here. So that's what I'm going to see on my screen, the 12 of you, because this game requires me to see you because it's called visual cues. So I'm going to explain how the game works. Everybody who are here not playing, doesn't matter, it's very entertaining to watch, I tell you. That's why it's a very hot game that we're bringing back. So visual cue, this one I will let Gateway take to watch everybody, okay? So the best idea is to see at least half of your body because that's going to give you a better advantage. Hint, 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 at least half of your body, okay? So now, over here we'll have already your cameras on. I need to make sure all 12 of you have your camera on. I need you to wave to me. Wave to me. And remember to unmute yourselves because I need to also, everybody can hear you, right? Okay, on your camera. If your camera's not on, you're not allowed to play because it's a visual cue game. So how does it work over here? So I will need your eye power, Gateway, to help me watch. So I'm gonna ask questions and
Okay.
see whether they qualify. So for example, I'm gonna ask you, those who have a long hair, you can continue to stay on. Those who have short hair, so what happens is you gotta off your camera and you'll be eliminated. So this is an example, not yet, haven't started yet, okay? Things like that. Or perhaps if you are wearing a particular color shirt, visual cue. So I need to make sure I can see you. Do we have all our 12 attendees camera on yet? Okay, who are the people who haven't on camera? So Wei Hong, you need to on your camera. And then Kelvin, you need to on your camera. Victor Tan, if you want to play, you also need to on your camera. If not, we need to give the chance to other people, okay? So I give you 5 more seconds to on your camera. If not, the other people can come and join us for the game. So very simple. This is called a visual cue. And then we're gonna just randomly drop, because we played that before. Randomly drop a certain visual cue. So how many people do we have on right now with the cameras on? Okay, we have 8. Do we want to let more people come in, or shall we gonna continue it? I'll let my producer decide.
Oh, Victor on already.
Okay, Victor, yes. Victor, okay. How about Kelvin and Wei Hong? Do you want to on your camera? If not, you'll be considered eliminated. My camera cannot on shit. Oh, Kelvin. How? Like that I have to give chance to some other people. Okay, I have 2 more persons I can put in. So the next 2 person we can just come in. So once again, everybody who are here, thanks for joining me. Visual cues, okay? So you think about what visual cue you wanna ask, okay? Okay, I can let 2 more people in to join us. And then, okay, what are we winning today for this game too? We are winning $50 voucher from Baoziling, and there will be 3 winners. So not just one, don't worry. All of you have chance because I have 3 different winners. So let us have 2 more people to come in to on their camera. I have Selena over here that's just joined us. Selena, I need you to on your camera. Can we are you excited?
Yes.
Who do you think will win this time?
Wow, I really don't know. I don't even know what I want to ask it.
You don't know what you want to ask it.
But I shall be fair.
Shall be fair. We try our best to be fair. Okay, you can on your camera, Fiona and Selena, because I need you to on your camera to actually play the game. Okay. Are we ready to on? If you're not ready to on, I'm just going to continue because of time constraint over here, okay? Okay, whoever is onning the camera until the last, except us, will be the 3 winners. Okay, the first question I have all of you. You need to show me if you have it, okay? If you are... Yeah, you ask the first question lah. Okay, any...
Okay, those who wear a watch on their left hand can stay. Show me your watch.
I give you a hint. You faster change to your left hand if you have time.
Soon more went away.
Those who don't have,
you got to off your video.
You will have to off your video and then you will be eliminated. Okay, we have Fiona on already. Yes. Okay. Ria also have. Victor also have. Okay, those who on. Okay, admin confirm all those who on continue to have your watch on the left. Okay, very good. Well, how many contenders are we left with now? Right now we're left with
1, 2, 3, 4, 5, 6, 7, 8. Okay, 8.
Okay, good luck to all 8 of you. The next question I'm gonna ask, okay? If you're wearing a digital watch, you can continue to stay in the video. Show me your watch is digital. Analog not counted lah. Digital. Everybody digital? This is a bad question. Everybody have it.
It's an in thing. How about Nick? Your watch. Nick, your watch is
Nick, is your watch digital? Oh yes, he also has hope. I fail. Okay, wait. You do the next question.
Okay. I'm afraid the next question may eliminate a lot. May eliminate everybody.
Everybody?
or many. Okay. Those who wear shoes or slippers can stay.
Oh, you must faster take out your shoes and slipper and show us, or you can put the camera down. Okay. Joe, you have ready. Who else?
Okay.
Linda. Okay. Sun Wong have.
They all have.
Okay, Victor have. Nick have.
I thought you all at home.
Have. Oh, everybody have. This is also a lousy question. Okay. And now for me to ask the other question. Okay, I know one person have it right now, but if you happen to have it near you, you can prepare to take it out. If you are wearing specs or shades, you can continue to stay. Okay. Faster, those who don't have, go and put on yours. You still be in the show. Okay, I know Linda is here.
5 more seconds.
Okay,
5,
Ria is putting in.
4, 3, 2, 1.
Okay, the rest don't have.
Nick,
you have
you
to
need
off
to,
your camera.
You need to
already.
off. Victor, you need to off. Fiona need to off. And Sharon, you don't need to off.
Okay, now how many are we left with?
We left with
1, 2, 3, 4. 4. Okay, I will just need to eliminate one more person. Okay.
Okay.
This will be a difficult one. The first 3 person who shows me this item can stay. First 3. So admin, you help me see first who is the first 3. Okay. The first 3 person who shows me anything white color can stay. Anything white color can stay. Oh, Ria have already.
Catherine
have already. What's the next?
Ria.
What's the next? Oh, Sun Wong is the third one, huh? Okay, congratulations. So we have our 3 winners over here.
So sorry, Linda is eliminated, huh?
Yeah, Linda a bit too slow.
I say Linda.
Yeah, sorry. So congratulations, our 3 winners.
I hope you had fun.
Yeah, she looks like she had fun. She's really laughing over here. Yeah, thank you so much for joining us, and congratulations to our 3 winners. So what you have to do now is you have to contact our admin, text us so that we can liaise with you to give you your $50 voucher from Baoziling. And once again, thank you so much and congratulations everybody for joining and winning this one. I really had fun about this round. I wish the game can be longer lasting lah. Okay, let me see, time check. Now over here we are at 6:27. So I think this is the time for us to do a closing. But before I do a closing, I have a video I want to show you all. This is a video of our client's testimony, because I have been sharing my personal testimonial for the longest time, because I'm a very satisfied client for the longest time. So now it's time to see some other people talking about Unicorn as well. Time for the video.
I do personal investment myself and also work different types of financial service companies. I chose Unicorn because of 2 primary reasons. One is the professionalism. Professionalism have 2 aspects of it. The first one is that the Unicorn have a rigorous investment process and the system, which after attending quite a few seminars by the investment director of Unicorn, I realized it is robust and well executed. The second aspect of professionalism is impartial. I worked with a few other financial institutions for my investment. I noted that when they are affiliated with a larger bank or another financial service, their decision might be influenced by their parent or sister company. Unicorn in this aspect is very good, being independent. In addition to professionalism, of course, a key reason for me to continue engaging Unicorn and also introduce my son and daughter to Unicorn is because of the trust. The consultant Pinyu that I worked with has been with me for 10 years. Not only I trust him for professionally, but also at life. And Pinyu not only provide investment service, but also anything that I need related to finance. For example, insurance, will, he's there to support me. And that is why I like Unicorn. And I hope you will. Thank you. Yeah, I have been investing with Unicorn for more than 3 years. The return itself has been quite good. What I liked Unicorn, to look back, through the seminars I attended by the investment director, I realized it paid particular attention to two aspects of it. One is the safety of the client's assets, to make sure that the value will not drastically reduced. Secondly, it constantly look for growth opportunities worldwide, not only Singapore, but also regional and worldwide. And I liked it very much. When it comes back to Unicorn, I'd like to add on to what I just described about professionalism. It clearly separates the service that they manage the assets for clients from the advice the clients seeking from Unicorn. So it doesn't mix the two, which is very, very good. When I worked with other financial service providers, sometimes I just wanted to park my money there. They keep asking me, are you a conservative person? Are you an aggressive person? And if the investment outcome didn't turn out to be my expectation, then they will say, oh, you chose aggressive yourself, which is to me not very good way, or at least I don't feel comfortable for that way of mixing the client decision with the service provider's decision. Where Unicorn, once it manages assets for the clients, it makes the decision for the best interest of the clients. On the other hand, if the clients want advice to evaluate their own investment portfolio, that is a completely different service. So I would like to say, in terms of professionalism, Unicorn is one of the best I've ever seen.
I like that video very much. But King-Wei, I know our session is ending, but for friends who really want to bring back something today, perhaps you can give us a summary of what you shared with us today.
Okay, if you don't mind, just take a short while, just wanting to express my gratitude and also how I see this partnership. I think this journey is we walk together. Yeah, I think it's no fun if we walk alone. Yeah, and everything is possible only with your existence. So I'll say this partnership, your existence has made my life more fruitful, more fulfilling. And equally, I hope that our existence has also added value to your life. Yeah. And my wish is really we can have a happy life together in this journey. But happy is a simple yet hard to define word, right? Yeah. What is a happy life? Yeah. So I think that I would like to summarize it in what my chairman, shared with me. Our chairman Patrick shared with me 14 years ago when I first joined. Yeah. So he really wanted to summarize a good life, a happy life, as health, relationship, and wealth. Okay, and wealth is definitely what our profession, to help all our friends like you, like ourselves as well, to be building our wealth so that we have these resources. We don't have to worry about money. And we have subsequently we have things like our 保智灵, which is really to help our friends to better their health, such that they don't have to have a health issue that's plaguing them. Yeah, and then the relationship, which is only possible when both parties wants to give into it, into a relationship, to be able to grow wiser, to grow more compassionate, and then to enjoy this friendship for a long, long time. That's why we have premises like the kampong, where I am today, which is really a good place where we can enjoy our friendship for many years already and many years to come. So that's really what I wish, in this partnership that we have with all of you. So just to summarize what I shared today. So I think we are in a world where there are plentiful of cheap money. So putting money into cash, I think, is not a solution for the long term. You're guaranteed to lose money. Trying to be very aggressive at this moment just because there doesn't seem to be any big risk the last 13 years. I outside of the COVID, which only lasted a month or two. Yeah, I hope that we don't throw caution to the wind just because the last 13 years have been a bull market for a lot of asset classes. Yeah. So I think it's at this time we need to be cautious. Yeah. And asset allocation is getting more and more importance as an insurance for your portfolio as this bull market gets longer and speculation is rife. So I really hope that through a sound and wise management of your portfolio, that you can be enjoying prosperity for the long term, and you can have a great insurance against whatever risk that's to come. Okay, I just want to share also some things that a new venture we kind of, the company and me, we could kind of get into. Okay, just for interest, okay? Yeah, so actually we started two things in 2020, just to share with you. So we started this a Unicorn external course, which me and two of my co-trainer has been giving training to the public every Saturday. Yeah. So I think now we are doing like the 10th, 11th class, something like that. Yeah. The purpose of that is really to help people who may want to have a change to get into the finance industry, as a foundation about finances, or people who are in this industry wanting to better their skills so they can serve their client better. Yeah, they could be financial advisor, they could be brokers. Yeah, this course then is really to help them. And of course, secondarily, it's also for people who don't really know what to do with their money, but they felt that investment is needed. Yeah, so this course is for people, they may want to consider DIY, do it yourself, and they come to learn about this course. So that's something we have, and if you think that's something that could be useful, you might want to consider it as well. Now on the right side, okay, Grey Rhino is my online personality. So if you look at him and me, we wear the same thing. Okay, so the Grey Rhino is I say where I want to be sharing my experience and knowledge of my insights with the public through YouTube, through Facebook, or through a blog. So if you're keen, you can actually go to the greyrhino.sg. You can sign up as a subscriber, and then every time when I write a new article, when I do a new YouTube, which is about twice every month, I'll send it out to you, so that I can share with you what I know, other than times like that. Okay, so I think that is what I really want to say, and I really thank you very much for your time today. I know it's a precious Saturday afternoon, and I'm so glad you choose to spend it, you choose to invest it with us, and I hope it has been very helpful for you.
Thank you, Kiwi. And meanwhile, if you have any more questions, although we aren't able to answer you directly right now, but we want to answer your questions. So at the end, you'll be directed to a feedback form. And then after the feedback form at the bottom, you can write down your questions and we will answer you directly from there after. And meanwhile, I also want to really thank you again, even though Kiwi has already said, thank you so much for joining us. And on behalf of Unicorn, in the words of the Unicorn team, as much as it's important for us to professionally produce results for all of you, but we cherish much more is the investment partnership like Kiwi has mentioned. And this partnership we forged with you many years. With me, I'm the client also many years. And it's with your trust and confidence in Unicorn that this is even possible today. So once again, on behalf of the Unicorn family, we want to thank everyone for your trust and confidence. And there's a saying in Unicorn, I love to keep saying that all the time. There are no colleagues, there's only family members. There's no clients, there are only friends. So I wish you to have a good day, a very good 2021, and let's do this together. 恭喜发财！
好，
恭喜发财！
Chinese New Year is coming. Okay.
Thank you, everybody.
Thank you, everyone. Thanks, Debbie.
Bye bye. Thank you.